Welcome back. In today's video, we're going to be exploring why I exited all of the cryptocurrency market. I have been on this channel since 2018. We've been uploading every single day since then. And we've been talking about the macro view of the entire markets, the financial markets, the stock markets, the asset markets like gold, silver, and also crypto, with a very high emphasis on the crypto markets, because as many of you believe, there is a great opportunity to make a lot of money in crypto, and there is, to the upside and to the downside. But it's really important to ask yourself some questions as you're investing to keep yourselves leveled with where the market is and where the market's going, and whether you're aligned with where the market is and where the market's going. Because otherwise, you get caught up in the hype cycle. And as you guys know, the psychology of the market cycle looks like this. You start at the bottom, you start moving higher, where you reach peak euphoria in the markets. And it may not be you reaching peak euphoria, but the markets reach peak euphoria. And we don't know where the top of the market is until after the top of the market. We can theorize and predict where the top of the market is going to be, as well as where the bottom of the market is going to be. But you're not going to know whether you're right until afterwards. And so this brings us to Peter Brandt, well-known futures trader since 1975, longer than many of us have even been here on this earth, saying, hey traders, when you're in a trade, does the position own you, or do you own the position? If you don't know the difference, then do yourself a favor and put your capital into treasuries and T-bills. And this is a great way to start this video, because does the position own you, or do you own the position? This is the Cryptoviser podcast. Today, we're going to be discussing why I exited all of crypto positions. Make sure you guys are subscribed to this channel. We upload every single day of the year to bring you the latest happening in the financial world. And also, do me a favor, give the video a free thumbs up. Now, the reason this question is so important is because a lot of people get caught up in the hype. They get caught up in the narrative of what this crypto or what this stock is promising. And they're not actually looking at the fundamentals. They're not looking at the cycle. They're not looking at the sentiment around the rest of the people in these markets. If everybody is bullish and everything is bullish, it cancels each other out. Nothing is actually bullish then, right? And this is where you hear buy the rumor, sell the news. A lot of the move to the upside in crypto is based on speculation. It's based on what's being promised, what people believe is going to occur. People are going to use Bitcoin as payments. Well, over a decade later, nobody's really using Bitcoin for payments. Even places like El Salvador that have made Bitcoin legal tender and really emphasized and pushed this, use Bitcoin for payments and microtransactions. It hasn't really played out that way. So much so that they're still using the dollar, right? And people are saying, but Cryptoviser, isn't the dollar going to go to zero? It's always been on its way to zero, right? It's always being devalued. That's through inflation, through money printing and all of that. But all the assets go up. And a lot of what we're seeing this cycle in 2025, when I told my viewers for many, many months, if not years at this point, that by the end of the cycle, I want to be completely out of crypto, completely out. And sometimes it's good to kind of reset your portfolio. I've followed a lot of traders for many years, and a lot of traders, sometimes they just completely exit all positions and just sit and wait. They wait for good opportunities. And as I've explained on this channel before, when we're looking at the Bitcoin halving chart, which is right here, this is days since the Bitcoin halving. I mean, literally the sentiment in the market is no, Cryptoviser, we're never going to have a bear market again. No, we're not. This cycle is different. We have all of these other factors that are in play here, so that we're not going to go into a bear market. We're going to have an extended cycle and all of this, even though we heard about the extended cycle in the previous cycle, which was BS. We heard about other factors in the previous cycles, which were also BS. Cycles run. They go up, they go down, they go sideways, and sometimes it's good to kind of reset, because otherwise your positions own you. This is where you hear a lot of people, like even on my channel, there will be people who comment and say, well, I'm already down 50%, so I'm just going to hope that we can go back to the high, or I'm going to ride it to zero. And it's like, even if there's the potential that it's riding to zero, then your thesis is not playing out. That's not a way to trade the markets. We're here to make money. If you're not here to make money and you're just here to cheerlead a specific crypto or stock, well, this is probably not the channel for you. Now, that brings us to another tweet that Peter Brandt posted. And it says, I've traded over 6 different decades with 4 losing years. I just don't get the hype on social media about being right. What does being right have to do with being profitable? If you don't comprehend the difference between the two, then do your money a favor and buy treasuries. And this is totally correct. You know, we have been correct on this channel. I have been very accurate with my calls on the market based on the data that we cover. But that doesn't mean I'm always correct about every asset. And I've never claimed that I will be. But in the macro sense, we're correct. As we've discussed in the channel, if you take $10,000, okay, and you put these $10,000 into 10 trades for $1,000 each. If 9 of those trades go to zero, you have $1,000 of an investment left. If that one trade out of 10, 20 X's, okay, you have doubled your money, even though you lost in 9 positions. So you don't have to be right 100% of the time. You don't even have to be right 80% of the time or 70% of the time. You just have to be right based on the market that you're trading in front of you, not the market that you want. Most people in crypto, they trade the market that they want, not the market that we have. Now, this is a big difference from what most people believe. They're like, well, Cryptoviser, what does that mean? Well, I'm trading the market in front of me. If the trend is down, if the narrative is not playing out, you got to exit the position, whether you're in a loss or whether you're in profit, because otherwise you end up becoming a top chaser. And so what is a top chaser? Well, let's look at EOS. EOS is a perfect example and just recently was brought up because Coinbase is finally delisting EOS after many years being on the market. And as Jameson Lopp said, arguably the most successful ICO of all time, back in 2018, they raised $4 billion. $4 billion to develop a new layer 1 crypto. And now the crypto sits at under $500 million market cap. It went from $18 down to 26 cents over that time frame. But Block One, which was the developer of EOS, still holds 160,000 Bitcoin at current prices, is about $16 billion. But they didn't develop anything. They didn't develop the next layer 1, the new layer 1. We really haven't heard anything about EOS in many years. And this also brings us to our previous cycle where we were very, very bullish on Cardano. We were following Cardano for many years on this channel from basically the ICO of about 2 cents. And when it launched in 2017, we were following this crypto very closely. And a lot of the promises that they were going to be, outpace Ethereum. They were going to be the #1 smart contract platform. And by the way, Cardano did succeed in a lot of things, right? I don't want to put it down completely, right? They were the first blockchain that had liquid staking or non-lock staking, the first actual blockchain that had staking of any kind where you can earn rewards. That started in 2020 and accelerated. And this brought a lot of success to Cardano. You guys can see from 2020 until 2021 where it topped out. It went from about basically 5 cents to $3. If we pull this back a little bit further in 2020, it was at 3 cents. So it went from 3 cents to $3, which is a 100x, okay? And what happened after this top in 2021 is I started to exit my position. I posted videos on this and the Cardano community went freaking berserk, right? Cryptoviser, you're going to regret this. We have an extended cycle, and it was all nonsense. But these people were married to their bags. They let the position own them. They didn't own the position. I was looking at the data. After a major move to the upside, we were seeing major declines in a very, very short period of time. And the trend is your friend to the way up and on the way down. And by the way, many of these people who let their position own them, they continued to hold through the 2025 cycle, believing that we would just magically hit new all-time record highs, even though Cardano didn't produce anything of substance, right? To compete with the Solanas of the world, the Sui's of the world, the the Hyperliquids of the world. Like there was, no competition when it came to Cardano from that standpoint. And we saw massive inflation and massive funding of projects, but nothing to actually show for it, right? I mean, hundreds of millions of ADA were deployed to develop the ecosystem. And these projects that received that money didn't actually produce anything. And they still got the money. So what did that mean? They were probably just dumping on the market. And so the bag holders, right, the people who let that position own them, they said, oh no, Cardano is definitely going to hit $3 any day now. We're going to hit new all-time record highs. We're going to go to $5 and $7 just based on hopes and prayers. But as most of these altcoins, most of them, right, there's I think actually 22 million coins. It'll pop up here in a second. 22 million different cryptos in existence. Most of these trend to zero, as we see with EOS. I mean, think about it. The EOS developer still has $16 billion in Bitcoin, and the project has created absolutely nothing. It's gotten no traction, no adoption, no usage. And so this is where you have to understand, like, these are trades, not for everybody. Some people are going to be bag holders. Some people are getting paid in other areas of the market. They're getting paid to promote. They're getting paid to develop. They're getting paid to run their business on these blockchains. So they're getting paid in other areas. But if you're just trading the markets, you have to understand most of these cryptos are trending to zero, especially against Bitcoin and Ethereum. Everything else is just a conversation, and I've said this for years. It's not really a negative to these ecosystems, but you talk bad about Cardano, you talk bad about XRP, and they just come in like crazy and downvote your video and comment and all of that. But again, this is about making money. This is not about pumping somebody's bag or, talking good about a crypto, because all of these other YouTubers and influencers who've been talking about these coins for years, promising that it's going to new all-time record highs, they just haven't, right? And this happens with almost every single crypto, because especially in 2025, there were very, very few cryptos in the top 100 that had major pumps. We saw Solana, Sui, Hyperliquid, and Aster, and a lot of these were just brand new coins or had very high locked supply. And so this is part of the reason that we saw, right? A high lock supply means a very low float. So when people are buying, it pushes the price to the upside much faster. And so we're not just seeing this in crypto. We're also seeing this in the Bitcoin treasury companies like MicroStrategy, right? From the middle of 2025, I told my viewers we hit the top of the Bitcoin market. And basically that means everything else is top of the market or very close to that, because everything follows Bitcoin. If Bitcoin drops, everything basically will drop shortly thereafter or already dropped. And so because I believe that Bitcoin hit the top of the market, that meant that these Bitcoin treasury companies like MicroStrategy, like Nakamoto, like BitMine Immersion Technologies on the Ethereum side, or SharpLink, that means that they are also peakish. And that's exactly what we saw. And since then, since that call, go look at my videos, July of 2025, I called the top of the market, boom, top of the market in MicroStrategy, and massive drop down since then, right? 50% till the end of 2025, and probably going much, much lower. But again, you saw the bulls continuing to push this thesis that, well, Michael Saylor said that we're never going to have a bear market again. But that's not based on any facts. That's not based on any actual what the market is showing us, right? And even through the capitulation, right? Because we know that Jim Chanos also took out a short position on MicroStrategy, doing the same thing that Strategy was doing, selling their shares on the market and then buying Bitcoin. And all the Bitcoin and MicroStrategy bulls were telling Jim Chanos he's wrong, he's an idiot, he's going to lose money, get ready to lose, all of this nonsense. And then he closed his short position in profit in November, right? After a few months and a 50% decline in MicroStrategy price. And then all the bulls were congratulating him. Well, great job, Jim Chanos. That was amazing trade, right? But also, why were they congratulating him? Because now they think, oh, now we can run. Now we can push back higher because Jim Chanos closed his short. completely ignoring all the other fundamentals, that the Bitcoin cycle was coming to an end based on the Bitcoin halving tracker, that peak euphoria was in the middle of the year when all these Bitcoin treasury companies were popping up and all of these real estate investors were selling their multi-million dollar homes to go buy into these Bitcoin treasury companies. And many of the Bitcoin treasury companies are down 90% or more in just those few months. Meanwhile, Bitcoin is at all-time record highs. And so part of the reason that I wanted to exit the position, because I knew that we were going to enter a bear market at some point. And the further we went in the bull market, the further we went in the rotation into the bear market, which I still think when I'm recording this video, we are in the rotation phase, the more I realized that this whole thing, this whole market is just nonsense, right? Because even Bitcoin hasn't achieved what they went out to achieve, becoming the payment processor of the world, become the new world reserve currency, right? Is it going to compete with gold and the dollar? Potentially. But it's not being used as payments. So much so that Cathie Wood of ARK Invest just came out and lowered her price target for 2030 on Bitcoin from $1 million to $700,000, a 30% drop. And her reason for her adjustment of her 2030 outlook is the most, for me at least, very eye-opening piece. And so the reason Cathie Wood gave for her reduction of the 2030 outlook was because stablecoins were taking away market share from what they believed Bitcoin would become, which would be payments, micropayments. People will be using it to pay for things. And nobody is doing that for the most part, right? Maybe 1% or less than 1% of Bitcoin holders are using it for payments. Everybody else is using it as a store of value, so the price goes up. And so if Bitcoin isn't being used from a utility standpoint, from a usage standpoint, what is? Well, is Ethereum? Maybe to a degree, right? Because Ethereum, you can have smart contracts, you can have NFTs, you can tokenize things, like all of that is utility. And it's probably, and it is already being integrated into financial systems and other private businesses and stuff like that. But outside of that, everything else is really just a conversation. I mean, even if we look at Solana in this previous cycle, Solana brought out meme coins, celebrity coins. That's pretty much it. And even this cycle, I was very, very bullish about internet computer throughout the last year or so because of the AI narrative. But internet computer was the worst performing top 50 crypto in 2025, at least until I made a video that said I was selling my ICP, which all of my videos are delayed on purpose. So it was about a month after, maybe a little bit more than a month after I exited my ICP position. But look at what happened immediately after that. Boom, we had a pump. And this just solidified for me, right? Because if we looked at the metrics on the Internet Computer's dashboard, there was no fundamental change in the usage or the adoption of the AI compute ecosystem or the Internet Computer Network. There were no major announcements of any integrations or partnerships. But magically, the day after Cryptoviser posts a video, I sold, I'm out, or whatever the video was called, all of a sudden, Internet Computer goes from $3 all the way to $9, a 300% increase in 1 week. To me, this is market manipulation. To me, this is clear move to the upside based on absolutely nothing is a pump and a dump. And pump and dumps are not what I want to invest in. Pump and dumps are not what I want to be, actually trading is pretty good for it, but not based on a manipulated market, right? And so we see this in a lot of the other areas of crypto as well. You know, we see a lot of newer cryptos like Hyperliquid and SWI, where the prices go up, go up, go up. And meanwhile, they're also being, basically people are liquidating their positions as you see token unlocks, right? With SWI was a brand new coin and it went all the way up to something like $3, I think, $3.80. And then what happened? We started to see a major drain. And a lot of this, in my view, had to do with the token unlocks. This was a slow drain of the ecosystem. So while you're bullish and your favorite YouTubers keep saying, well, SWI keeps going higher, The early investors, the adopters, the insiders, the developers, whoever it is getting their coins unlocked, they're just slowly releasing coins into the market. They're not selling all their coins, but they're selling enough where the price can continue to go up while still draining the market. And then at some point that stops because retail, the everyday user, starts to run out of money. And that's when you start to see the major declines in the price. And so generally speaking, I don't want a position to own me, as Peter Brandt asked, right? I don't care whether I'm right. It doesn't matter that after I closed my ICP position, ICP pumped 3x because it still didn't go to new all-time record highs. It didn't go anywhere close to the all-time record highs. And the pump was based on nothing. So I don't care whether I was right. I want to be profitable. And when you're down 50% in a position while the rest of the market is pumping the entire year, you got to get out. You got to get out of that position. And understanding that the bull market is and would come to an end at some point, it was time to exit. And this brings us to another tweet from Peter Brandt. So Peter says, as a career chartist who has made his living trading into his sixth decade, here's what things he disregards: complex narratives. If interest rates do X, then stocks should do Y and metals should do Z. He said, I find creating cross-asset narratives to be a complete waste of my time. And I would agree, right? We hear MicroStrategy. Well, if MicroStrategy creates another debt facility called Stream, and they go after European investors and they can gain more money and then they can, put their Bitcoin per share higher. But guys, it's all financial gibberish. This should be a very clear narrative, right? For AI, for instance. Well, AI, at the beginning of the AI narrative run, right? Everybody started to use AI. We started to see major implementations of AI. We started to see massive investment in AI. That's a point to start trading it because it's very clear that this technology is going to grow. Does it peak out at some point? Yes. Are we in a bubble? Potentially. But look at NVIDIA, right? It went to $5 trillion market cap. For me, MicroStrategy, their narrative is so complex. Their thesis and how they're actually playing out by raising money through preferred shares and then creating another facility for other preferred shares that trump the previous preferred shares. This is so complex. And the fact that we are, in my view, going into a bear market for crypto, the easiest narrative is to counter what MicroStrategy is doing and bet against the price of MicroStrategy going up. Anyway, moving on. Peter Brandt said he disregards indicators. These are derivatives of the price. Why should a derivative of the price, why should I study a derivative of a price when I can study the price directly? Seeking perfection, right? There's people who think, oh, well, Cryptoviser, you were wrong about Solana. Okay. Like I said, you could be wrong about 9 trades. You only need one good trade. In the previous cycle, we invested in a lot of different cryptos. But the best performing crypto was Cardano, going 100x to the upside. But if you didn't sell into any of that profit, you ended up losing. Thinking of that economists know anything useful, right? You hear Jim Cramer saying something. You watch Bloomberg and hear somebody say, oh, buy this, buy this, buy this. We know how that ends, right? If everybody is bullish on something, it's not bullish anymore. Day trading. He disregards day trading, right? Because again, I post my videos on a delay on purpose because the macro understanding of where the trend of the market is doesn't change from day to day or week to week. I'm not trading day-to-day prices. So when people say, well, Cryptoviser, you sold the absolute bottom of internet computer, it's like, technically it wasn't the absolute bottom of internet computer. And I'm not trading internet computer based on a day. It's had a full year of downtrend. And now you're telling me right after I sell, I should be regretting selling because it went up 3x based on absolutely nothing? Disregard. Pyramiding, I think we know what that is. Believing that CNBC or Bloomberg or any YouTuber have anything to offer me. This is another thing. Like people think that I owe them an explanation. Well, Cryptoviser, why do you think that that's going down? It's like, watch my video and you'll understand. I'm not here to convince anybody of anything, right? I'm just sharing my opinion. But it's the same thing when I'm watching other YouTubers. I'm just listening to their opinion. They may tell me, or you, or whoever else is watching, you should buy this. But that doesn't mean you should, right? That's just their opinion on it. A government reports. He said they simply create volatility, not meaningful direction. Again, pump and dumps versus trend. He said he disregards day-to-day volume. I do too. I only pay attention to massive spikes in volume, which are either ending or beginning of volume, not in the middle. He said he disregards trend lines, disregards symmetrical triangles, except every so often. He said he also disregards the idea that charts predict the future. And again, he's a chartist. He's literally a chartist. I don't believe in charting, but I watch the charts because sometimes you can look at a chart and say, well, what is the trend? The trend is down, right? What is this chart, the Bitcoin halving chart? This tells me, based on the previous cycles, where we're going to top out and where we're going to bottom out. Is it exact? Is it going to predict the future? No, but it can give you a guide. He also said he disregards the idea that charts provide a meaningful edge. He disregards win rate as an important metric because you're only as good as your last trade, right? I mean, everybody who's been bullish on crypto, even bearish on crypto, whatever, you could be wrong. And this is why it's important to take profits. This is why it's important to understand when you need to take a loss in a position. Because at the end of the day, when you move on to another trade, you just move on to another trade. And this is where a lot of crypto, they don't. They stay locked in. And they're like, well, I closed out my position last week and now it doubled. And then they start buying back in, even though they exited for a specific reason. So whenever I'm exiting or entering a position, it's independent of every other trade that I have ever made. And typically when I'm exiting specifically crypto, like stocks, you can get in and out because the fundamentals of stocks are very different than crypto and there's a lot more transparency. But this cycle, people, including on this channel, made more money in the stock market than they did in crypto. They made more money in the Bitcoin mining AI companies than they did in any cryptos because everybody was just believing that we're going to go higher in crypto because that's what crypto does. But now Wall Street is involved in crypto and they're changing the narrative on that. And there's still people that are living in the previous cycle. We covered this in the middle of the year when I called the top of the market. When I showed you guys the Saifedean Moose interview with another Bitcoin maximalist, and he's like, we're coming to the end of the cycle. And she was like, wait, but in the previous cycle, we should be at $200,000. And it's like, but we're not in the previous cycle, we're in this cycle. Yeah, but in the previous cycle, this happened. It's like, yeah, but that was the last cycle. That's not this cycle. And there's a lot of people, a lot of influencers, a lot of YouTubers that are living in the previous cycle because they don't move on from a trade. Every trade is independent of its last. And these are some of the reasons that I exited crypto because I do see that most cryptos do not hit their all-time highs after they first launch. Even Solana, which we've talked about, right? Solana went to $260 as the all-time high this cycle, but this was barely above its all-time record high from the previous cycle. So it basically touched the all-time high and came right back down 3 times. So everybody who's top chasing, who bought the top and they think that we're going to go higher just because, well, in the previous cycle, that was the all-time high, so we have to go higher this cycle. It's like, no, we don't. And there's also a lot of other dynamics at play in crypto, like the emission of new coins in the ecosystem, insider coins getting unlocked, insiders selling their coins that they've had for a long time. And that affects the overall breadth of the upward moves. And like I said, this cycle, the only real coins we saw do any meaningful gains from a crypto perspective were the brand new coins that launched in this cycle. All the legacy coins significantly underperformed what most of the market thought they were going to do. When if you were just in the stock market, you would have performed better in many cases. And so this doesn't mean that I'm out of crypto forever. And this doesn't mean that we're not going to continue to talk about crypto. Because in a downtrending market that we're moving into a bear cycle, there's opportunity to buy when or as we're approaching the bottom of that market. Because we may not hit all-time record highs again, but if we go down 97% or 95%, is there a potential we'll double from that 95% bottom, which is nowhere near the top? Yes, and that is the opportunity to trade these markets. But like I said, every trade is an independent trade. And it's really important to own your position. Don't let the position own you. And for that, let me know what you guys are doing in your portfolios. Make sure you guys are subscribing to this channel. Give the video a free thumbs up and check out my other videos. Until next time, see you on the next video.